What do you actually make per hour?
Go ahead. Think of your number. $20? 30? 50? Whatever number just popped into your head, I'm going to show you that the real number is dramatically lower. And once you see this math, you cannot unsee it. My name is Finn, and this channel is about one thing: understanding money in a way that nobody ever actually taught us. Today, we're starting with the biggest financial lie that most working people believe every single day of their lives. Here's the uncomfortable truth. Most people who earn $30 an hour are not actually earning $30 an hour. They're earning closer to $4. And I don't mean that metaphorically, I mean that literally. When you sit down and calculate every hidden cost, every stolen hour, and every invisible deduction, the number collapses. Stay with me. I'm going to walk you through the full math, step by step. And by the end of this video, you're going to understand something about your paycheck that most people work their entire lives without figuring out. And more importantly, I'll tell you exactly what to do about it. Let's go. Let's use a real example. You earn $30 an hour, 40 hours a week. That's $1,200 a week, around $5,200 a month, roughly $62,400 a year. Sounds solid, right? Now let's watch what actually happens to that money before it ever touches your bank account. First, federal income tax. At $62,400 a year, a significant chunk of your income sits in the 22% federal tax bracket. After the standard deduction, you're paying roughly $7,000 to $8,000 in federal taxes alone. Then, state income tax. Depending on where you live, 0 to 13%. Let's use a moderate 5%. That's another $3,100 gone. Then, Social Security and Medicare, also called FICA. That's 7.65% of every dollar you earn. Another $4,773 per year, automatically gone. And we haven't started yet, because that's just the government's cut. What about your health insurance premium? If you're insured through your employer, the average employee contribution is around $1,400 a year for individual coverage. Let's use that conservative number. And your 401k. Most advisors recommend putting in at least 6% to capture your full employer match. That's $3,744 a year. So, your gross salary is $62,400. After taxes, insurance, and retirement contributions, your take-home is $41,883 a year, about $3,490 a month, a 33% reduction, before you spend a single cent. But here's where it gets really interesting, because we haven't talked about the hours yet. Your employer says you work 40 hours a week. But do you? Let me list every hour you actually spend because of your job that you are not getting paid for. The average American commutes 27 minutes each way. That's 54 minutes a day, 5 days a week. That's 4.5 hours every single week, traveling to and from a job, unpaid. Over 50 working weeks? That's 225 hours a year. Go shower, iron the shirt, pick the outfit, pack the bag. This isn't optional leisure. It's required by your job. Conservative estimate, 30 minutes a day. That's 2.5 hours a week. Over 50 weeks, 125 unpaid hours per year. How often do you think about work outside of work hours? Checking your phone for emails, stressing about Monday on Sunday night, mentally rehearsing the meeting, answering a Slack message at 7 p.m. because your manager sent it and you feel like you have to. Studies show the average worker spends at least 15 extra minutes per day on work-related mental activity outside of work. That's 63 hours a year. Refilling your parking meter, dropping your work laptop for repairs, taking a conference call during your commute. The small things that belong to your job but eat into your personal time. Conservative, 30 minutes a week, 25 hours a year, 438 hours a year, minimum, that you spend because of your job, unpaid, your official paid work hours, 40 hours times 50 weeks equals 2,000 hours. Your actual total job-related hours, 2,000 plus 438 equals 2,438 hours. Now remember, your take-home pay was $41,883. $41,883 divided by 2,438 hours equals $17.18 per hour, not $30. $17.18. And we still aren't done. Here's the part most people have genuinely never thought about. Your job has costs, real money out of pocket costs, that exist only because of your job. If your job didn't exist, you wouldn't pay these: gas, car wear and tear, parking fees, public transit passes. The average American spends $8,000 to $10,000 a year on commuting when you include car ownership, fuel, and maintenance attributable to work travel. Let's use a conservative $3,000 a year, because a lot of you are probably saying, my commute isn't that bad. You don't wear business casual to the grocery store. Work clothes, work shoes, dry cleaning, the iron you bought because of your job. Conservative estimate for most office or service jobs, $800 a year. Buying lunch because you had no time to prep. The coffee you grab because you're exhausted from waking up at 6 a.m. The vending machine at 3 p.m. because you didn't get a real break. The average American worker spends $2,746 a year on work lunches alone, according to a Bureau of Labor Statistics analysis. Let's round down to $2,000 all in to be fair. This one is sneaky, and it's real. When you're exhausted from work, and 76% of American workers report regularly feeling burned out, you spend more money. You order takeout instead of cooking, you impulse buy online because you had a stressful week. You pay for a gym membership you plan to use after work, but you never do because you're too drained. Researchers call this wage compensation spending. Estimates range from $1,500 to $3,000 a year for the average worker. Let's use the conservative $1,500. Total work costs: commuting, $3,000. Clothing, $800. Food and coffee, $2,000. Decompression spending, $1,500. Total, $7,300 per year, $41,883 take-home pay. Minus $7,300 in work costs equals $34,583. That's what you actually keep. $34,583 divided by 2,438 hours equals $14.18 per hour. You thought you made $30. You make $14.18. That's not a rounding error. That's not a technicality. That is the real number. And here's the worst part. We still aren't done. Most people understand taxes at the surface level. Money goes in. Government takes a chunk. What's left is yours. But here's something the tax system does that almost nobody talks about. Every dollar you earn from a job is taxed at your marginal rate, which means every extra hour of overtime you work is taxed more than your regular hours. Let's say you decide to grind harder. You pick up extra hours. You hustle on the side. You earn an extra $5,000 this year. Here's what actually happens. If that $5,000 bumps you from the 22% bracket into the 24% bracket, some of that extra money gets taxed at the higher rate. And depending on your situation, earning more can also affect your deduction eligibility, your tax credits, and if you have student loans on income-based repayment, your monthly payment goes up too. The system is designed so that working harder for someone else becomes progressively less efficient. Now compare that to passive income. Long-term capital gains, the money you make from investments held over a year, are taxed at 0%, 15%, or 20%. If your total income is under roughly $44,625 as a single filer, your long-term investment gains are taxed at exactly 0%. Zero. The money that your money earns is taxed less than the money your body earns. That's not an opinion. That's not a life hack. That's just the United States tax code. And the people who understand this use it. The people who don't keep working harder and wondering why the math never seems to add up. Because it genuinely doesn't. Not when you're only using labor income. Let's do the final calculation together. All of it laid out. Starting gross salary, $62,400 federal income tax, minus $7,500 state income tax, 5%, minus $3,100 FICE, Social Security plus Medicare, minus $4,773. Health insurance premium, minus $1,400 401k at 6%. minus $3,744. Take-home pay, $41,883. Commuting costs, minus $3,000. Work clothing, minus $800. Work food and coffee, minus $2,000 decompression spending, minus $1,500. Net actual money kept, $34,583. Total hours spent on work-related activities per year, 2,438 hours. 34,583 divided by 2,438 equals $14.18 per hour. Every hour of your life you trade for that job, only $14.18 comes back to you. Here's the point. The way out of this trap isn't to work more hours. More hours gives you more labor income. More labor income means more taxes at the highest rates, more time spent, more burnout, more decompression spending. It's a treadmill that goes faster, not forward. The actual escape route is this. Use part of your labor income, even a small part, to buy assets that generate income without your time. Index funds, dividend stocks, a small business, digital products, real estate over time, anything that separates your income from your hours. Because here's what that math looks like on the other side. If you invest $500 a month, just $500, into a total market index fund starting today, at the historic average return of around 8% per year, after 30 years, $745,000. That $745,000 generates roughly $30,000 a year in returns, taxed at 0% to 15%. Compare that to your job, Louis.Rush, which pays you $14.18 an hour in real terms, taxed at 22%. One of these grows over time. One of them doesn't. Look, none of this is your fault. Nobody taught us this in school. Nobody showed us the real math. Nobody said, hey, before you take that job, before you agree to that salary, before you spend the next 40 years of your life trading hours for dollars, do you actually know what the real number is? They didn't. But now you do. And knowing is step one. Step two is what we're going to talk about every week on this channel. How to actually use this information. How to start building the other kind of income. Even on a small salary, even with debt, even starting from zero. If this video showed you something you've never thought about before, share it with someone who needs to see it. A friend, a coworker, a sibling who just started their first job. Because this math applies to everyone who works, and most of them have never seen it. Hit subscribe. Because next, we're covering something that builds directly on this why two incomes, two people both working full-time, can leave a household more financially broken than one income alone. It's counterintuitive, it's real, and the math is just as shocking as today. See you then.